Hello everyone, hope you guys are doing well. I want to make this video today kind of going over just a few trades that we took last week from the 31st of May to the 4th of June. I just want to go over a few of them and kind of give you a little insight as to how we trade and what we look for and what we send out to our members. Alright, so the first one I want to discuss with you is GBP Chef. We noticed GBP Chef coming into an area of demand. Area of demand, I'll just indicate with this yellow box. Okay, we had accumulated, pushed into a prior demand zone, and made a higher high, breaking the counter trend. All right, so buy limit was placed at 1.27000. It is a psych level for this pair, 45 pip stop, and our take profit is way up here at 2923. That's our swing TP. We came down, tiny bit of drawdown, but then we finally pushed our way back up, hit our TP1 and I believe TP2, if I'm not mistaken. But then we kind of came back down. We're rallying back to the downside now. Stops are at break even, so we are okay in terms of that. Another one right in here, we can see that as we came into 1.27, we formed another type of institutional pattern formation here. All right, Asian session, we took the high, took the low, and then we made a massive move to the upside. So another re-entry point for this that we sent out was 1.271, which is right about in there. Came into it very, very nicely. However, I didn't get the fill because this was the daily closure candle. The spreads were too high. However, after we made a higher high, I still felt that we could run this low out and then make another move to the upside, which is what we did here. We came into it again, and then TP1 was hit very, very swiftly, and now we're kind of just trickling back down. So hopefully we can continue up. Doesn't really matter. Stops are at break even, and that's what we have for GBP Chef. Next one is Euro Cad. Euro Cad was very interesting. This happened on Friday. Just a very simple trade. What we did do is we swept all of this liquidity in here. We can see the retail pattern, the head and shoulders. Shoulder, head, shoulder, fake to the downside, enticed the sellers, push right back to the upside, took their stop losses, then we took it off of this demand zone in here. All right, so it was just a simple sell to buy move that we caught. I personally did not get the fill on this because of the spread, but I know a lot of people who did and made a good 6% return on this particular trade. All right, so simple, just coming into demand. This was NFP. This was last Friday. Manipulative move to the downside, entered, pushed to the upside, quick 1 to 6. All right, the next one I want to go over is GBP AUD. GBP AUD happened on a higher time frame. All right, I'm going to go with the 1 hour here. So as you can see, we are clearly in this massive uptrend. Shouldn't be looking for shorts at all. Similar to Euro Cad, what we did have was the retail head and shoulders. Shoulder, head, shoulder there, sell to buy, move. Okay, that's why retail does not work. All right, we don't trade any of that stuff. We understand that this is a retail pattern, and then we look for potential buys in the opposite direction of the retail traders. Okay, so what did we do? Well, we simply came into this region of demand in here. We accumulated on a lower time frame, which I'll show you now. Go down to the 10-minute. We did accumulate in here. We sprung, and then it was a simple just retest of this last selling volume before the big up move here. All right, so going back to the hourly time frame, filling up an imbalance, we got into the T and then pushed up. Didn't quite hit our overall take profit at 1.85. Did come down and hit us break even. However, we did take a lot of partials off the table here. All right, now potential new setup would be push down into here to sweep all of this liquidity here, the low here, and react off of our last point of demand. Now, I'm not going to be putting a buy limit here. However, I will be looking for accumulation, potential break of structure, counter trend to then pull back and take this thing long. All right, but for now, pretty good trade. Didn't quite hit our overall TP. Went back, hit our stop loss at break even. Still made a good amount of money. All right, next I want to go over USD Cad. USD Cad was very, very beautiful last week. I think it was Tuesday or Wednesday, midweek last week. What we noticed was that price formed a pocket of liquidity here, equal lows. We sold, we bought. However, we were trading other pairs that had opposite correlation. I think we were looking to buy GU as well, which is the opposite of USD Cad. Sometimes this is okay to do as long as you have your rules and your setup in play and it looks good and you have all your criteria in order to enter. It is okay in order to enter opposite trades, meaning buying GU and buying UCAD. They are inversely correlated, but sometimes it's okay because you don't quite know for sure which strength or correlation will actually play out. So in this case, the dollar strengthened. Yes, we lost on GU, but we won on USD CAD, easily taking out all of those losses. So hedging, it can be used to your benefit as long as you do it the right way. So we came back, and it was 15-minute time frame, I believe. Yep, right in here, our last point of demand. You could have came down and bought it within here. We wanted to be conservative. We got in here, had a little bit of drawdown, and then it quickly hit our take profit that day. Just good for a quick 1 to 2, just intraday scalping opportunity. All right, now we are looking at this pair to go short because what did we do? Well, we came into a point of supply after sweeping equal highs. All right, we are in a massive downtrend still. So I'm looking for a reaction from this 10-minute supply. We can push up into that level, sweep this high because most everyone is going to be taking a short. Look, higher high, higher low, higher high, higher low, higher high, lower low. So everyone thinks, oh, we're going to pull back, 61.8% fib, still a retail, it's a retail Fibonacci level, and then fall again. Well, a lot of people are placing their stops right above the high. So I think that we still have to come into this supply level in here, sweep the stops, have one more run of the high, and then fall. I think we're going to see that probably tomorrow. All right. So that was USD CAD from last week, right in here. Beautiful trade. Another one I want to go over is Euro USD. We were looking at an entry at 1.21 on Friday morning. We sent out the limit, had a beautiful reaccumulation here and a higher high. So looking to take out this low, which is exactly what we did. We took out the low and then we just missed our entry. So we did not get in this trade. However, I am looking for a re-entry on this, whether that be the last selling volume in here, lines up with structure. So 1.2134. However, if it does come all the way back down to 1.21, I will deem this valid. So I'm going to keep my original buy limit here and then look to take that long if it does pull back. I think before having a massive move to the upside, I think we'll come back down, have one more sell to buy move, and then we'll just absolutely go from there. Sweeping this last low, coming deeper into this reaccumulation level. If we do that, perfect. If not, then we have this potential entry here as well. Same sort of stop loss. Yes, it's not the best risk to reward ever, but it will be good enough to take, in my opinion. This could potentially come all the way back up into 1.3. This would be a higher time frame swing trade because as we can see, if we just zoom out here, we accumulated within this region of price. Came into demand, higher high, broke structure, pulled back, looking to potentially make a higher high. This could take weeks or even months to complete. 1.3 kind of comes back into this higher times supply region, and I'm looking for price to continue up. We just traded into that daily 50 EMA, so I'm looking for price to continue to go long. The dollar is very weak, so I'm looking at buys across the board on XXX USD. All right, I believe that is all. I may have missed one or two. Oh, yeah, one more. US 30. Really like this. What do we do here? We came into this last buy to sell move after breaking structure to the downside. Could we continue up? Yes, we could because we are in a higher time frame uptrend. However, I'm looking for some sort of relief on US 30 to push back to the downside. And we can see here on the lower time frame, we came into this level perfectly, creating this last buy to sell, 50% of that, coming up into that level. We didn't hit our stop. It came up like a pip away from it. We had our stop just right above that high, didn't quite hit it, and now we are pushing down. So in a good amount of profit here, really liking this. If we can continue, this could be a huge swing trade. If we absolutely just tank off the face of the earth, this would be about a 1 to 863 risk to reward trade, which would be absolutely insane. But that's if this is the top of the whole entire market and we have a huge pullback that we should be looking for and another push back to the downside, coming down into 28.3, which is right in here, coming back and testing sort of this prior demand level. All right, not going to get too much into why I'm choosing this level to target, really for the VIP members, but just know that we are looking for shorts. We are currently in this, and if this does fall from here, we would have had a wick entry right at the top, which would be absolutely amazing. So all of these entries were sent out to VIP. We did have a few that lost last week. I will be transparent, but overall, very, very good week. Had a great ROI percent return from last week. So really, really good. We did lose a few. I believe we lost 2 or 3. But all the other ones with the amazing risk to reward that we do provide, because we don't provide anything less than a 1 to 5. If we do, which is that USD Cad trade, that 1 to 2, we will specify intraday scalping opportunity. So still was a great trade. It wasn't a 1 to 5, but normally we send out everything above a 1 to 5 risk to reward. So we are actually going to be running a celebration promo. It is our 1-year anniversary of starting Arielfx. So this will last for an entire month, probably through the 4th of July. I want to give back to you guys and give as much knowledge and value as possible. So we will send all of the details in regards to that promo in a little bit. Just letting you guys know that prices will be significantly reduced over the next month. I will highlight our website. You will come here and you will see pretty much all the services we do provide: courses, VIP, community services. We do have Indicator, the Wyckoff Wizard, that has been absolutely destroying the markets. And we do have a few more of those that are coming out shortly. And we do have our PAM service. This PAM service will include a portfolio of algorithms that has consistently given us 5 to 10% return per month over the past 4 or 5 months. And we are releasing that to the public. A minimum investment of $5,000 is required. This is a long-term, consistent, profitable trading system that we have put our own capital on the line for and made great returns. So guys, hope you guys enjoyed this video, kind of giving you a little bit of idea how we trade here, what we look for in terms of institutional formations, institutional volume order flow, because that's how we at Arielfx trade. So as always, if you have any questions, please feel free to DM us on IG or Telegram. We'll be happy to help. Even though you may not be a part of our group, we're still willing to answer any questions that you have, try to give back as much value as possible. So with that, I will end this video. Thank you guys so much. Have a great rest of your day, and we'll talk soon.